Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Welcome to The Bigger Picture. I'm Dan Koh. Now, in recent weeks, Indonesia has seen widespread protests, not just over perks for lawmakers, but over issues that cut deeper. We're talking inequality, rising living costs, perceived corruption, and fiscal pressures. And markets have not stood still. Capital has fled, the rupiah has weakened, and confidence is under pressure. Meanwhile, Bank Indonesia is trying to steady the ship, balancing interventions and signaling the independence. So to find out how this unrest is feeding into the economy and what it means for the banking sector's asset quality and how vulnerable the rupiah is, we're pleased to welcome on the show Rena Kwok, the Senior Credit Analyst, Asian Financials at Bloomberg Intelligence. Good morning, Rena. How are you doing today?
Good morning, Dan. Thank you. I'm doing fine. It's just a very rainy Friday morning.
Yeah, a little bit gloomy start to the day, but certainly a little cheery to know that the weekend is just around the corner. Let's turn over to Indonesia, where it is facing a tough political climate, grappling with protests over rising living costs and, of course, police violence in the past few weeks. And on the market front, it's been hurting investor sentiment in Southeast Asia's largest economy. So let's start with the currency market and turn over to the rupiah, which is now considered to be one of the worst performing Asian currencies year to date. So what do you make of the latest price movements and how do you see a weaker rupiah impact on the major Indonesian banks today?
Sure. I think the direct impact of a rupiah depreciation on major Indonesian banks is expected to be contained. And that is actually due to their low net open foreign currency positions as well as well-matched FX loans and deposits. Now, I just give you the figures. If we take a look as of fourth quarter 24, conservative net open foreign exchange positions at the major Indonesian banks, which is below 3%. So that actually limits material capital impairment risk from large movements across the currency pairs. But risks are likely to emerge indirectly through the pressure on the borrowers via a weaker rupiah. But that being said, major Indonesian banks, by and large, the strong loan loss provisioning is a solid buffer against possible asset deterioration.
All right. Thanks for that breakdown, Rena. Now, how do you see the evolving protest situation in Jakarta impacting Indonesia banks' dollar bonds then?
Sure. I think, as we continue to see political changes in the nation as well as the unrest. Now, in terms of the impact to the major Indonesian banks' dollar bonds, is actually manageable near term. This is because, like I mentioned earlier, for most of the major Indonesian banks with dollar bonds outstanding, their underlying credit continues to be very resilient, and these major Indonesian banks actually hold the bulk of the banking sector assets. These banks are, supported by ample provisions, strong capital buffers to absorb potential credit losses if the unrest escalates. Now, as of end of August, the bond spreads of Indonesia banking dollar bonds have only widened slightly on a sequential basis.
All right, thanks for that breakdown, and it's certainly quite comforting to know that at least there's some resiliency when it comes to the Indonesian banks' dollar bonds today. So let's bring this conversation a little bit more broadly to the stock market, where we're seeing global investors withdrawing a net $254 million from Indonesian equities during the week, while Fitch Ratings cautioned that prolonged instability could likely weigh on the country's credit profile. So more broadly, why do Indonesian banks' stocks and bonds face disparate performance amid the nation's unrest political headwinds?
Sure. I think, if we take a look at the disparate performance between Indonesian banks' equity and dollar bonds performance, while I mentioned earlier the impact is manageable for bondholders, given that the underlying credit strengths are likely to remain resilient. But on the flip side, on the equity side, they are likely to face weak sentiments, I think, with the banks being more exposed if the unrest persists, given that we have seen outflows totaling nearly 4 trillion rupiah so far this year.
Oh dear. Well, that's something to watch out for. Now then, back to Indonesian banks. How should we be assessing Indonesian banks' asset quality through the year's end, especially when we're considering the rising political and social uncertainty following the local protests?
Yes, I think this is actually a very timely question to bring the focus back to the Indonesian bank's asset quality. And we actually expect for the major Indonesian banks, average credit costs for this year to be slightly higher than last year as they rebuild their buffers due to the tariff headwinds, as well as from the indirect risk that we see from the policy changes to rupiah weakness, which could actually hurt the borrowers from some sectors. Now, the tariffs will actually strain the Indonesia labor-intensive manufacturing sector. If we see the figures, the manufacturing sector non-performing loans ratio will actually risen from about 2.91% in January to 2.95% in May, and that shows early signs of stress as well as across consumers in rising non-performing loans from mortgages, vehicles to household goods and micro loans.
All right, Rena. Now then, which Indonesian bank's asset quality may face greater headwinds should protests escalate further then?
Yes, so in our peer group, PT Bank Rakyat asset quality, given its focus in riskier microloan segments, could actually face greater headwinds should the unrest in Indonesia escalate. But on the slightly positive side, its strong provisioning and capital buffers could partly blunt this risk. And we do expect for PT Bank Rakyat, its credit costs are likely to remain elevated this year amid weakness in the microloan segments. Now, on the flip side, Bank Central Asia sector-leading asset quality could proceed with credit costs likely to come under the 1.4 to 1.5% average that we are forecasting for the sector this year.
Okay. Well then, against the backdrop of this political uncertainty, Indonesia's government and central bank have also announced their unusual collaboration to fund government programs that has led to some analysts questioning whether it would compromise the Bank of Indonesia's independence. So, what are the risks do you see when it comes to Indonesian banks as we look ahead to the year?
Yeah, I think one of the risks to watch out for is with the recent political changes, it actually raises doubt about the nation's fiscal discipline going forward. And that could actually bring, potential repercussions as well, because the rating agencies actually downgrade Indonesia's sovereign rating. It could actually cascade down to the major state-owned banks' credit ratings given that sovereign-linked support. Now, while actually the rating companies currently have Indonesia on stable outlook, potential deficits that could actually breach the 3% debt to GDP ceiling with substantial rise in government debt could actually trigger negative rating pressures, which needs to be watched. And we continue to see evolving, developments on the front as we see, the reforms that's being pledged, whether they can really keep to their fiscal discipline. I think that needs to be watched going forward for the banking sector, other than, the asset quality headwinds that I mentioned earlier, as well as, previously we talked about how Indonesian banking tight liquidity conditions may persist in second half as, the impact of interest rate cuts as well as the supportive government measures takes time to follow through. This is despite that we have seen recently in the news that the government actually pledged to boost half of their capital reserves to the state-owned banks immediately. So, that takes time to flow through, and near-term, the tight liquidity conditions could just weigh on the funding costs for the banks as well.
Right, that's a perfect summary of what to watch out for when it comes to Indonesian banks for the rest of the year. Now, just very quickly, Rena, one of the biggest news making headlines this few weeks when it comes to Indonesia is the sudden exit of Sri Mulyani, which has come as a shock to many investors. She's regarded as a credible counterweight to political pressure and a defender of institutional integrity. So then, how might the ouster of Indonesia's finance chief impact the nation's lenders going forward then?
Sure. I think, as I actually explained in the previous question as well, all this points to the question, what happens to Indonesia fiscal policy prudence going forward? I think, with the nation, we have seen Paul Breyer, that the new finance minister, actually giving mixed messages on the fiscal policy as well. So the 3% ceiling that I mentioned earlier should potential deficits breach the 3% deficit ceiling with substantial debt and government debt, that could actually trigger rating pressures that needs to be watched for the banks with the state-owned, state-linked support. So that is something to be watched, even though the rating agencies currently now have the nation on stable outlook for all three of them. But I think going forward, I think that's what the market is watching as well.
Very interesting. Thank you so much for the comprehensive breakdown of what we need to take note of when it comes to Indonesia's market amid this tough political climate they're in. Thanks for joining us this morning, Rena.
Thank you for having me. Have a good Friday ahead.
Likewise, Rena, you have a good break over the weekends. We've been speaking to Rena Kwok, Senior Credit Analyst, Asian Financials at Bloomberg Intelligence. Keep it right here with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.